Hello traders, Joseph here again. Thank you so much for joining me on yet another edition of my weekly video. If this is the first time that you're watching this video, I want to welcome you and thank you so much for tuning in. Hopefully you're going to like what you see by the end of this video, and if you do, then please feel free to leave a positive comment, or if you can hit the like button, or you can actually do one better by subscribing to my channel so you can be one of the first few people to get this video as soon as they come out. So anyway, moving on to today's video, I've actually got a different kind of preparation in terms of the trading opportunity that I want to show you guys. So instead of just showing you guys a potential trading opportunity on a single currency pair, I'm going to show you 3 potential trading opportunities. So you can not only stay 1 step or 2 steps, but even 3 steps ahead of the market. And all these opportunities just involve using simple structure or simple technical analysis, if you like. So anyway, let's head over to the chart. And the currency pair I'm actually going to be focusing on today is the Aussie dollar. And as you can see, I've got my Aussie dollar chart on the 4-hour time frame, and I just want to focus on just this portion of the chart. This is just going to involve simple structure reading. That's what I'm going to do right now. You guys should be familiar with this by now. If you've seen my videos, and you should be familiar with the way I do my technical analysis. So we had a move back down here, followed by a retracement. We had another move, form a new structure low. So we got the initial low here, new structure low, followed by a retracement back into previous structure. And I don't need to tell you guys that this market, this is a bearish market, because we had a bearish structure right there, and then we continued the bearish trend. The market formed another new structure low, followed by a retracement. We didn't quite get back into the previous structure, and then we created another new structure low, followed by a little retracement, and then a new structure low, followed by a retracement. At this point, you know, the market is completely it's bearish. I mean, it hasn't given you any sign that it's about to change direction or anything. Because as long as the market continues to form new structure low, that market is likely to stay bearish for as long as it can. So we had another new structure low, followed by a retracement, another new structure low. Oops, let me just move my. Followed by a retracement. And then the market came back into the previous structure, but we didn't break it. So at this point, the market formed a double bottom. So this is the point where you should pause and look at what, and wait for what the market is about to do, and wait for the market to show you what the next step that it's going to do. You know, all the way back from this point, the market has been bearish, forming new structure low after new structure lows. This is the first point that the market took a pause and put a double bottom, and this is usually a sign that the market is about to change direction. I mean, if I bring in my RSI, you're probably going to see an oversold conditions, or probably a divergence. But that's what I'm not focusing on that right now. I'm trying to show you guys a potential trading opportunity. I'm not trying to show you guys what has already happened. So the market, after forming a double bottom, it rallied, forming a higher high. See, breaking this previous structure, forming a higher high. At this point in the market, you should not be bearish. I mean, if you know how to read market structure, you shouldn't be bearish. That's if you're trading on a 4-hour time frame, and obviously it's different if you're trading on a higher time frame or lower time frame, depending on what the structure says. But at this point, you should not be bearish. So a break of previous structure, the market came back down into previous structure support, resistance now turned support actually, and then we rallied, forming a new structure high. So at this point, the market puts in a bullish structure. So now you're gonna have to tell yourself, when is the next? I mean, if you haven't been involved in the bearish market, if you haven't done anything, if you haven't traded there, this is the point. Now you have to, prepare yourself. What's your next move gonna be? Because at this point in time, if you're trading on the 4-hour time frame, you should you should not be bearish. Just simply based on what the market has done, based on what the structure the market has put in right here, the bullish structure. Coming out of a bearish market, the market puts in a bullish structure. So now the market is retracing. Where is it likely going to go? The simple answer is previous structure. The market is likely going to come back here to the previous structure. And if it does that, what are you going to do? Obviously, you're going to go bullish. You're going to go long. So this is the next prediction. This is the next prediction that you're going to make on the market. For the market to come back into the previous structure, for you to get long. So if you get long in this market, where's going to be your where's going to be your target? Now there are two ways you can do this. This is a trend continuation trade. You can either take your actually what I'm going to do is I'm going to clone this and show you a 1-to-1 harmonic move. If this market comes back into this previous structure, we're likely to form a harmonic move. That's where your target, that's where you should be taking your target. Now I don't know if the market is going to go there. Obviously I'm going to use some Fibonacci retracements and try and see if I can find some Fibonacci confluence, or or even a Fibonacci ratio, something that that I feel comfortable with. So if you get long at this previous structure, your first target, obviously you have to take it at a previous structure high. Or you can look for extended target over there. So let's bring in our Fibonacci ratio and see what we're getting there. So swing high to swing low. So we can see that this harmonic move terminates at the 127 extension. So 1-to-1 harmonic move back into the 127 extension. So this is going to be the first trading opportunity that you should be keeping an eye on as we head into the this week of trading. For potentially to get long at around 72.90s and a target at around 75.90s. But that's a 300 pip move. So what happens if the market does that? So what's the next step that I was talking about? Because I'm going to show you like 3 different ways that you can. I mean, guys, if you remember I think I did a weekly video on this Aussie dollar pair on a daily chart where I showed you guys potentially. I think it was like, I can't remember what the video was, but once I finish, I'm going to put a link to that video under this video. It's where I show you guys how to potentially stay ahead of the market by drawing advanced patterns to predict where an advanced pattern is going to complete or what the next move is going to be, and you're going to actually see how amazing this is, because exactly what I told you in that video, this is exactly what's happening in the on this currency pair. So anyway, moving on, the next trading opportunity I'm going to show you is the one that involves just simple. So now that we know where this market is going to terminate, we've got a 127 extension right there. So if I bring in my Fibonacci ratio from there, swing high to swing low. Actually, I should have marked down where the 127 extension was, because I think we do have a Fibonacci confluence. So swing high to swing low, we do have. Okay, let me just bring in this and mark in. That's my 127 extension line. Swing high to swing low. We didn't quite get a Fibonacci count, but it's quite close. That's our 1618 extension. 618 extension. Excuse me. So we do have, not quite a Fibonacci confluence, but terminating rather around about the same area. So what's going to happen if this market comes back into this this Fibonacci, the 618 extension? What do we have here? Look left. We do have a little bit of structure right here. Now obviously I've had a lot of people ask me questions about if I trade the C leg of an advanced pattern. Well, you can trade the C leg of an advanced pattern, but you have to be very, very careful in what and how you trade the C leg of an advanced pattern. And the next opportunity I'm going to show you just right now is trading the C leg of an advanced pattern. So looking at the 1618 extension, coming back into previous structure, and we had a 1-to-1 harmonic move back into the 127 extension. So this is going to be a nice area to get into counter trend trading to short the market. So from this trading opportunity, once you go long in the market, take your targets off. This is going to be a nice area to short the market, simply because if I flip this over to daily chart, that's gonna be, and I bring in my Fibonacci swing high to swing low, 161 extension, X to A leg, 161 extension. Now we're currently in the process of forming the B to C leg. So that P to C leg is likely to terminate at the 127. I mean, I don't expect us to break this previous high. So that B to C leg is likely to terminate at the 618 extension. So if you get short at the market, so that's going to be your next trading opportunity. After you get long, that's going to be the next trading opportunity here to short the market. And if you short the market, you should be looking at completing this Gartley pattern on the daily chart. So let me bring in my triangle. Swing high to swing low. It's a bullish Gartley, so I'm going to try and change this color to green. So assuming the market comes back into the 618 extension, then you can trade the C leg, because you have a 1-to-1 harmonic move, you have a previous structure, Fibonacci confluence. I mean, this is a lot of reason for entry right there. So this is it, guys. I mean, this is 3 different opportunities. I mean, I'm not saying like everything is gonna happen like as I predicted. Probably it's not gonna happen, because the market can just rally from this point. I might give you one of this trading opportunity, or you can even give it, there is a chance it can give you all three opportunities. But it's just a way that you can sort of pace yourself and see, and be able to prepare yourself, because it's all about ifs. I mean, if you do this technical analysis, if you prepare yourself, all you have to do is just wait for the market to give you that trade. But doing this analysis always helps. So anyway, that's it for today. I'm gonna show you guys the result of my signal service. Unfortunately, this week we haven't taken a single trade this week because there was nothing. I mean, we had the non-farm payroll last week, and so the market has sort of consolidating really. Then not really. There hasn't been any advanced pattern that I've seen on the chart. So we haven't taken a single trade. However, we have taken about 5 trades last week, and I don't remember doing a video last week. So I'm going to show you all the trades that we took last week. So let me just bring in my Excel sheet first of all. So as you can see, we've taken on 4 trades actually. We had a 100 pip winner on the Swiss yen, and then we immediately gave it back on the Euro yen. The Aussie CAD, I think we came within 2 pips of hitting our second target, but that trade is still open. And then we had the bearish Gartley where we took our first target off, and then as soon as the non-farm payroll came out, took us out on the second target for break even. So let me go over and show you guys the trades. So the first one was the Swissy against the yen. So this was the trade. It was what was it? A bearish cipher pattern. Well, this is the bearish cipher pattern that we had on the Swiss yen. So if I bring in my chart to show you guys what happened. Swiss franc yen. So this is it, and that's the trade. As you can see, the market came in. It was virtually a painless trade. So one of the trades that I love really. I mean, the market just came in, took us in, and rolled over, hitting our first and second target for 100, just over 100 pip. I think, what was it? No, 100 pip, exactly 100 pip. And then we gave that back immediately on the Euro yen. On the Euro yen, we had a bullish Gartley pattern that took a while to complete. So let me just bring in the chart. And after it completed, the market just never actually gave us anything on that one. So this is the Euro yen bullish Gartley. So the market completed, and then it rolled over, hitting our stop loss, and then we gave the 100 pip that we made on the Swiss yen back immediately, which sucks, but that's trading for you. It happens. There's nothing you can do about it. You just move on to the next one. And the next one we had with the Aussie dollar against the Canadian dollar. We had a bearish bat pattern. So this is the bearish bat pattern that we had. So let me bring in my chart and see Aussie CAD. So this is the bearish part. This was actually a very, I mean, it was a roller coaster. I mean, it put us through a lot of emotions. I mean, the market came in, took us on our order, and kind of just went into a little consolidation right here. Came very close to taking us out. Actually, within 7 pips, I think, of taking us out, or 9 pips of taking us out on our stop loss. But then the market came back. It came close to our profit target, and then it just went back up again. and then if eventually on Friday it took us out on our first profit target. So now we're waiting for the second target. It actually came within 2 pips, but it never gave us that second target. So the last one was the euro against the US dollar. We had a bearish Gartley pattern, and so let me bring over my chart again to show you guys. Euro against the US dollar. So this is it. So you can see this is the bearish Gartley down here. So the market came on, took us on our order, and then gave us the first target. It actually came within just I think about 2 pips of our second target, and then the non-farm payroll came out, and then the market just took us out on the second target for break even. I mean, it sucks, but it happens. So whatever, nevertheless, we still ended the week on a 53 pips. I mean, obviously, if we close the second position on the Aussie CAD, that will give us just over 100 pips for the week, which would have been a nice week. So this week we didn't take any trade. So flipping over to my equity curve, and I'll show you guys. Like it's just been gradual and steady. I mean, after our drawdown, the market, it's just as you can see, it's just steady progress. We're making progress. I mean, every single week we're bringing in positive results, but it's not big results. It's just like 10, 20, 40 pips here and there. So it's not a massive. It's not the kind of results that we've been having the first 6 weeks of the that we started this signal service, but it's a slow and a steady progress. And yeah, but as they say, every week that you end up without losing any money is a good week. So we just have to keep plugging away. That's all we can do. I mean, this is it happens sometimes. I think with the election coming up in the UK as well, I expect the next few weeks is going to be really crazy in the markets. So I wouldn't really be staying with the pound pairs, to be honest. I'm not even going to be touching them. But I think it's going to be crazy all throughout the currency pairs. So, but we just have to wait and see what happens. We just have to wait and see. So we started June quite very good. So we just have to wait and see what happens. So I think this is it. This is it for me. I don't think I've got anything to tell you guys about. Yeah, I mean, if you still wanna join me on my signal service, like always, the link to the sign up page is at the bottom of this video, and also put the link to my TradingView page, which I don't really post any charts on there anymore, because I've just been busy trying to focus on the signal service and a few other things as well. But yeah, I mean, if you have any questions, just drop me an email or anything, and I'll be happy to help. So anyway, I wish you guys good trading this week, and I hope I hope the week is gonna be a good week. So yeah, this is it for me. Bye for now.